Welcome everyone. Hello from Tallinn. I'm Christina from One Office, and today we are speaking about giving you tips about how to run your Estonian company when you are a digital nomad. I have Hans with me, who is the co-founder and CEO of Safety Wings, and he will be covering the insurance side and also what they see, what kind of support the digital nomads need. So please write your questions to chat. There's also a poll that you can take if you're interested in it. And we will do our presentations, and afterwards we will attend your questions and answer them. So let's get to it. If you can please write if you can see and hear us. If you see the slides, then this would be awesome. Then I know that everything is working from a technical side. And this gives us also a couple of minutes. All right, all good from Italy, super. This also gives a couple of minutes, seeing if somebody is also joining us. And all right, so I will start with my part, and then later on Hans will take over. All right, so let's get to it. I'm working for One Office, and what One Office does is that we help foreign entrepreneurs to set up local companies. We have offices in 6 different countries. There are 40 specialists who are working us. We have in-house lawyers, in-house accounting department, and so on. And we have actually served for more than 4,000 different companies already. And our clients come from more than 70 different countries. And main part of the clients are foreign entrepreneurs, and among them also digital nomads and location-independent entrepreneurs. And that's why we have also put together this webinar to address exactly the digital nomads and their questions. So in Estonia, if you already know, it's super easy to register the company. It's very simple. You can do it online when you have the e-residency card, and it's done basically within 1 business day. So the things that you need to consider in order to set up the company or business legal entity, and this doesn't apply only in case of Estonian company, but for any other company that you plan to set up. So first you have to do a bit of research. So you have to do your business plan. You have to think through your business model. What are you going to do? How you will generate revenue to your company. The other side is the obligations. What are the company's responsibilities? What kind of taxes would apply? What are the requirements to set up the entity, and so on? So this is the homework that every businessman should do in order to avoid some unwelcomed or unexpected surprises. And of course, when you do set up the company, then you need to consider the ownership and management structure. Depending on the countries, there can be either one person who sets up the company, or there might be some other more complicated management requirements. In Estonia, it's easy. There can be one person who registers a limited liability company called OÜ. And the same person can also be the board member or the director of the company. So you need only just yourself to start a business. Then, of course, you have to choose a name. When we are speaking about Estonia, then you can't choose a name which is already registered, which is existing. And you can't choose a name which is too similar to already existing company. And the third thing is that if a word or expression is registered as a trademark, then in order to use this part of the word or this expression, then you need to get the permission from the trademark's owner. Then if we register the company in Estonia, we choose one main business field of activity. It's a business code. Usually it doesn't match 100% of what you will do, but it gives a an overview in which field you are operating, even though the code doesn't perhaps specifically list down all the activities or the business sides, what you are handling. And of course, there's the banking options that you need to consider, where you are going to open the bank account or fintech account, how can you accept money and make the payments, and so on. So if you're speaking about Estonian limited liability company, which is called OÜ, as I mentioned already, then there are some, but fortunately not many requirements. So first of all, the company has to be registered to Estonian address. And if the management is not located in Estonia, then the company also needs to appoint a contact person. And this is where the service providers will help you out. They will provide you the address, they provide you the contact person. Keep in mind that contact person can't be any person living in Estonia, because from the legislation change since last year, contact person can be only licensed provider, either law firm or business service provider who has a license. So friends can't help you out here. Then the company needs to do the accounting, as it is mostly in all countries. But whether the accounting is done on a monthly basis or whether it's done once a year for the annual report depends now specifically on your company's profile. But the annual report is mandatory for everybody, and it's mandatory regardless whether you do business, whether you have had transactions or opened account or not. In that case, we just need to submit zero balances annual report there. When Estonian company is registered, then there is a share capital. It's marked 2,500 euros. This is the minimum. But when you register company, you don't need to pay it in. We will get back to. We will talk more about it in the next slide. And of course, there's taxes. So the tax office viewpoint is that every company or every person should pay taxes and should do it somewhere. So we will speak more about that as well. So as I mentioned, the contact person and address, it's a local Estonian address. The Estonian business legislation puts the contact person requirement. And besides having the contact person and legal address in the registry, they also ask for the board's location address. So there might be, let's say, if you run the company from Germany and you're renting a co-working space there, then this co-working space address can be your board's location address. And as I mentioned, then somebody who is licensed can provide the contact person service. Yeah, so accounting and annual report, it's mandatory. In Estonia, when the company has the Estonian VAT number, and then we do the VAT declarations every month. There's no option to do it on quarterly basis or even on a 6 months or 12 months basis. Only monthly declarations are available. And if you do have employees who are Estonian tax residents, then we do salary declarations also every month. And in Estonia, when we speak about the annual report, then there's no dormant company status. So as I mentioned earlier, then the annual report has to be submitted in any case. And whether the company has submitted the annual report or not basically shows whether it is in a good standing. Because if somebody hasn't submitted the annual report on time, then it might be assumed that company is actually not following the requirements and is not wanting to keep the company in good standing. So it's kind of like a trustworthiness measurement as well. So I mentioned already the share capital. In Estonia, the minimum is 2,500 euros. Basically, when you register the company, you don't pay it in right away. The owner, the shareholder, decides when it's time to do it. And you can make the contribution to European Economic Area Bank or on the fintech account, which is the European Economic Area fintech provider. When we speak about fintechs, then we speak about TransferWise, Payoneer, Revolut, Paysera, and so on. So these are fintech providers in our sense. So if you haven't done the contribution, then you can conduct the regular business. It doesn't mean that you can't do your regular business. But what the only restriction that there is that the owner cannot pay out dividends. So the logic behind that is that first the owner has to make the contribution, and after that they can take out money from the company. It means distribute the profit, and we have to do the share capital registration in the e-business registry, and we also declare it in the tax office, because let's say after 5 years or 10 years your business has totally changed and you decide to close the company, then this your contribution amount, if it's declared in the tax office, you can take it out tax free. So nobody's putting any corporate income tax or personal income tax on it. And coming to the taxes, so this is the hot topic, and not only digital nomads are struggling with it, but other foreigners as well who have businesses in one place registered. They actually live in a second place, and in third place they have their clients and their sales and so on. So it's quite complicated to map down or understand where should I actually pay the taxes. So tax office viewpoint is that taxes have to be paid somewhere. They do depend on the tax residency of the company. And now it's important to understand that in many cases, if you're registered in one country, then this might not mean that the company is that country's tax resident. And this makes it difficult because the registration place of registration is one, and place of business or the permanent establishment is somewhere else. And that's why it's confusing to whether I should pay taxes here or there. The good thing is that Estonia has signed double tax avoidance treaties with more than 60 countries. So it means that if a company has paid one tax in Estonia, then it shouldn't pay the same tax in another country. So if we are speaking about Estonia and Germany, then if the company pays the tax in Estonia, then the same corporate income tax is not paid in Germany. But you have to keep in mind that there's two levels of the tax residency. One is the company level, and the other is the private person level. So if we are speaking that company pays company's taxes and private person pays private person taxes, then this is not considered as double taxation. Then it's like regular taxation because the persons who are tax liable are different ones, even though you are the owner of the company and so on. So if we speak about permanent establishment, then the permanent establishment is basically if you own a foreign company, then if you manage this foreign company from another country, then the permanent establishment is created. And if you do sell services or goods in a foreign country on a permanent basis, and there are also many other aspects that can create the permanent establishment. So it might be very field or business specific, and it's always good to consult with the tax advisor in order to get an idea. Even with tax office, Estonian tax office is very user-friendly in a way, because you can always ask questions and they will answer, and their homepage is also in English. One important thing to keep in mind is that the permanent establishment, if there is a permanent establishment, then general taxation rules do not apply. And general taxation rules in Estonia are that there is no corporate income tax if the profit is kept in company. It means you can all the income or the revenue that you get, you can reinvest, you can use it for business purposes and so on. But as soon as you want to pay it out, then the corporate income tax is 20% from the gross amount. Until you keep it in the company, then you don't pay anything. but this wouldn't apply in case there's a permanent establishment. So, and now making it even more difficult. So if you're a digital nomad, so now where you pay the taxes depends on whether you have tax residency somewhere, personal tax residency or not. So if a digital nomad has a tax residency, let's say in Germany, then the company would pay corporate income tax in Estonia, fringe benefit taxes in Estonia, and salary taxes if the salary is paid to an Estonian tax resident. So the corporate income tax is the same 20% that I already mentioned. The fringe benefit taxes are basically if you do any transaction which is not related to company's expenses, then this will be taxed with social tax, income tax, and so on. And this bundle altogether we call fringe benefit tax. So try to avoid it at any cost if possible. And of course, if you have Estonian, if you have employees who are living in Estonia, they are Estonian tax residents, then all the salary taxes are paid in Estonia. If you have somebody who is working from some other country, they are some other country's tax resident, then their salary taxes are paid to that country, not to Estonia. And of course, in the home country, the digital nomad has to pay the personal income tax. So if we are speaking about paying out the dividends, in Estonia, the company pays the corporate income tax. Then you, as the digital nomad, receive this amount to your account. And now, depending on your own home country, there might be like private person's income tax as well that you pay separately as well. So this is the easy case in, where the digital nomad has the tax residency. But in many cases, as I have heard from our clients as well, digital nomads say, but I don't have a tax residency. I travel from one place to another place. I'm 3 weeks here, I'm 1 month there, I'm 3 months there. So in a sense, in reality, they don't even get the place of interest. They don't have like a home base somewhere. So in that case, it's super difficult to manage the taxes because, again, the tax office viewpoint is that taxes have to be paid somewhere. And tax office knows that, well, you did you were born in some country, you did grow up usually in one country. We will actually see in 15, 20 years from now when digital nomads have their small kids and who travel with them and who don't have this place of interest or place of home. So we will see how the tax officer reacts then. But basically, this like tax residency or the home base that you can choose can be like the country where you were born, the country where you grew up, the country where you lived past years, and so on. So our tip is that it is good to have some kind of personal tax residency, place of personal tax residency, because otherwise all these countries can raise a hand and say that, oh, I want to get the tax from you and I want to get the tax from you. All the tax offices are competing for our tax money. So, and now we as the taxpayers have to be clever and smart and tell them that, no, I won't pay taxes to your country because my tax status or tax setup is actually somewhere else. And another thing is that if you do not have a possibility to make yourself a place of personal tax residency, then you can pay a board member's fee, for instance, and pay all the taxes to Estonia and creating the tax residency here in Estonia in that sense. And if you're speaking about board members' fee, it's not the same as salary because there is no pension and there is no unemployment insurance premiums involved. So basically in Estonia, the personal income tax is 20%, and this is withheld from a person's salary. And the social tax is 33%, which is company's responsibility, company's cost. So I hope it was the mix of the taxes that it did give you some overview, and you can consider how to resolve it in your case. When we spoke about when I spoke about the fringe benefits, so I also brought out here what is taxed in Estonia and what is not. It's all business expenses, regular business expenses are tax-free, and also business trip like accommodation, flight tickets, train tickets, transportation, and so a taxi and so on. But what is taxed is food and drinks. So don't wine and dine with your clients. This is usually a big surprise for the clients. And if you do wine and dine, there's a very, very low limit in Estonia, like 32 euros per month, which is basically nothing at all. And that's why it's better to avoid these costs in your company. And the other ones are, well, representation cost goes under that, like going to the restaurant or entertaining your guests or business partners, and also donations are taxed. So very, very easy it is to keep in mind that if you have like regular business expense, you can actually explain why you did this cost, and that it is not like food and drinks in a sort, then this is not taxed, and business trips are not taxed. All right, so our tips or what you can take from this slideshow is that if you register a Estonian company, you actually can take it anywhere with you. It's easy to run it remotely. It's a super nice way for digital nomads to do business. In Estonia, we have low bureaucracy. Because of that, you can also do most of the things online. This simplifies many procedures. And what you need to do is to sort out the tax situation, to be aware of everything. And also, as a digital nomad, you might want to know about the insurance, how to protect yourself. And I will give floor now over to Hans, who will be speaking about that a bit. So here you go.
Let's see, just have to share my screen here. Here we go. Can everyone see my screen now? Just give me a yes. Yes, cool. I'm Hans. I'm one of the co-founders of Safety Wing. In Safety Wing, we are building cross-border insurance for remote workers. So I'll just give you a quick highlight about what we're doing. So what we're trying to achieve is basically, I guess many of you are location-independent people, and what we're trying to bridge and build is what we call a global social safety net. The idea actually comes from, I'm from Norway, and from the Scandinavian countries, where you have a decent amount of a social safety net, just being born here and paying taxes here. So you have health, disability, retirement savings, and so forth included in basically in your taxes. But that depends. That kind of assumes being in Norway. So what we're trying to do is to take this concept and build it for a new and modern world of remote workers. This is where we are today. So we started out with travel medical insurance, NOMAD insurance, in 2018. Then we this year launched a proper health insurance for remote companies. I will speak a little bit more about that later. we're also doing retirement savings next year, and also life and disability insurance after that. So this is typically how it works for a remote company. You're headquartered somewhere. It could be Estonia, it could be somewhere else, and then you have employees spread all over the world. And then you want to provide benefits to those employees, and that's basically what we're trying to. That's the problem we're trying to address, not only for companies but also for location-independent individuals. So, to dive a bit more into the insurances to think about. Obviously, there's a lot more insurances to think about than this, but I've tried to strip it down to the ones that apply to basically lifestyle of a digital nomad or a remote worker. So you can basically split it into three, right? So you have personal insurances, the insurances that covers you as an individual. Then you have business insurances that protects your business. And then you have, it would be interesting to know how many of you that actually have remote employees, but then you have employees as a third thing. It ties into business and the personal aspect kind of all at once. And to dive further into every bracket here. So if we start with health, we've talked about taxes so far, and taxes varies from country to country, and it's the same with health coverage, right? So and I also think that's the most important thing you should have as a person. Access to care if something happens or if you get sick is one of the crucial things you need. So how it works in different countries? Well, in Scandinavia, you can normally rely on the government as long as you are a part of the welfare system. It's actually the same in the UK to some degree. Germany, Austria, Netherlands. I also think Estonia, but I'm not entirely sure. Are examples of countries where you are buying a local health insurance that you're required to have by law. So you have these different concepts in various countries. It normally only covers you in the country you are, and you need additional coverage if you go abroad. Then you have life insurance. It's kind of an insurance that could be called death insurance, but it's a payout for in the event of death. It's something that people with spouses or mortgages often have, but not everyone has this. Then it's disability insurance. That's the kind of insurance that covers you if you can't work anymore. There are several aspects or variations to a disability insurance. One is basically if you get disabled, you get a lump sum payout, and that's it. Another one is an insurance that covers you throughout the disability period, basically. And then you have assets insurance, personal assets. So it could be your MacBook, it could be your house, it could be your car, etc. Then it's business insurance. That's not something I'm doing on a daily basis, but I know a fair bit about it. So the typical things for a tech business or freelancer business is to have a liability insurance or errors and omission. If you do something wrong and you have to pay your client, then the insurance could potentially step in and take that cost. You have cyber insurance. So cyber insurance is typically the case where you're getting hacked, you lose basically value as a result of that, or your clients lose value and you're sued by them because of it. And then we also have assets insurance for business. My business, it would be basically the same as my personal one, my Mac, but it could potentially be a business that is asset driven, and then you should cover those two with insurances. On the employee side, it's similar to the personal. What's typically covered by an employee is health insurance, life insurance, disability, and also part of retirement savings or pensions. I'll talk a bit more about that, but that's kind of common knowledge, I would say. So then the question is like how, this is kind of the normal world. Now we're talking about location independence and remote. And then to do every bracket here on the personal side. So what do you do with health insurance if you don't have a home country? Or we can start with the scenario. So a very typical scenario that was discussed under the taxation is, well, you don't actually live anywhere. You spend 2 to 3 months per year in various locations. meaning you're not part of a local welfare system or national insurance scheme. Then it's a question about how to deal with that and on the health side. So then you're in a situation where you can't rely on the country system. You need to find something else that covers your health regardless of where you are. So you have access to care in every single country you're in, basically. And there is solutions here. So there was a new kind of insurance that emerged in the 80s-ish, and that was cover for expats. Obviously, expat coverage doesn't really apply to this new world, but it has some similarities. But an expat is typically a person from one country moving to another country and living there for a period of time. And then you could buy coverage in your home country for the place you were going to live. From here, there have been built some new products, which is basically health insurance that you buy, which is a privately held health insurance that covers you on a global scale, regardless of where you are, and you pay a monthly subscription. So there are solutions to this, even though you don't pay taxes anywhere or you are kind of truly location independent. It's the same with life insurance. It's no, but that, well, so health insurance, it exists a solution. On life insurance, if you're truly location independent, I think you will struggle to find a good solution that will cover you regardless of where you are. And the same with disability insurance and assets insurance. So there are some gaps here to be filled still. On the business side, that's one of the good things, I think, with the e-residency program, because if you have a company in Estonia, you would be able to buy liability and errors and omission insurance for that company in Estonia. I know there is a company doing this for e-residents, but I can't remember the name. If someone knows it, please type it into the chat here. But then you could typically do liability, cyber, and assets directly in your company in Estonia. So that's one of the good things. Then is employees, and that's one of the harder things, right? So you can typically imagine a company set up in Estonia. It could potentially have 0 employees in Estonia, but 1 or 2 employees spread in 20, 30 different countries. So the normal way to deal with insurance for employees would be to go to a local provider and buy health insurance for them. That's how it's done kind of in the traditional businesses that don't really scale or work when you have like 1 or 2 here and there in various countries. So then you basically have 3 options. One is to not cover it. That could be a violation of local laws in the country where the employee is based. And it's also a bit hassle for the employee. The second is to pay a stipend to the employee to cover it. That basically has the same argument. It's just that it's a bit nicer to do. So it could be a violation of local laws, and it puts kind of the job on the employee. The third option is to basically help the employee and find local solutions for that remote worker in his home country, if he has a home country. But the fourth solution is basically to go with a company that can cover all of the employees in one go. That's what we're trying to do at Safety Wing, at least, and that's one of the solutions. I'm not saying it's the best one, but it's definitely a solution to make the life simpler for both the employee and the company. But this all depends on how the company is structured and where the employees are and so forth. And the same basically applies for employees spread around the world, to life insurance, to disability, and to pensions. Pensions is or retirement savings is also a very hard thing to do on a global scale. The reason is that, as we just heard, it's normally very connected to taxes, and taxes are local on a country-by-country basis. So that's one of the harder things to do at the global scale. But this is just to try and say what we're doing. So today we're doing personal health and also employee health. We're soon launching life and disability for both persons employees. We're not doing business insurance. We're only building global products, so they should be able to work in at least the majority of the world. That's all I have. I was quicker, so we're on schedule again. Back to you.
We can start with the questions then. I already managed to reply some in the chat, but I will go over them as well. So Marlene is saying that VAT is only needed if you earn more than X amount per year. So generally this is true, but there are also other aspects that may make the company bring in the situation where the company has to register for the VAT. For instance, there can be limited VAT registration in case the company buys services from other EU countries, whether it's digital services and so on. There are certain limits. There are certain limits when it's goods, when it's services, and so on. So it's the VAT is also not as straightforward. In Estonia, the general rule is that if the company sells more than 40,000 euros per year in EU or in Estonia, then it should apply for the VAT number. But of course, there might be some other aspects that actually overrun it, and the VAT is actually needed sooner or needed in another country, and so on. So I hope this answered your question, Marlene. To continue with, so fintech providers don't work as for declaration or the share capital certificate. In the tax office, we need a European Economic Bank statement that contribution has been made. For this, we need real bank, not fintech account, right? So no, as I already replied to you in chat as well, there is no need to have a real bank in that sense. For instance, TransferWise can issue the share capital contribution certificate in Estonian and digitally signed, and this is suitable for the business registry. As registering it for the tax office doesn't require any certificate. You just do the declaration, or the accountant does the declaration. So basically, if any European Economic Area bank or fintech cannot provide you with the certificate in Estonian and digitally signed, then ask the certificate in English. It's possible to translate it to Estonian and present these papers to the registry and register share capital anyway. So there are like workarounds, but it's a bit more hassle, but it's doable. So let me see, very many VAT questions. Let's see if we have some soon for Hans as well. So I can pay company tax to Estonia, but personal tax, for example, to Spain. Yes, basically, if you are a foreign entrepreneur who has a Estonian company, then in general cases, it may be that you pay some taxes to Estonia and you pay personal taxes to Spain if you're a Spanish tax resident. If you're a tax resident somewhere else, then you pay to some other country. So... And Adrian is asking, what if I permanently travel and I am not living anywhere, somewhere? Then I guess I already answered that and showed on my slide that if you can't choose a tax residency for yourself, then you can pay the board members fee and you can pay the taxes to Estonia in order to create some kind of like tax permanent base for yourself. But of course, before jumping into it and doing that, consult with tax advisors, consult if you have already a Estonian company and have accountant, consult with the accountant. You can consult also like with well, we all have some place where we have grown up, so you can also include those tax advisors from that country. All right, so what means fringe benefit tax? So basically this is, yes, I even don't know how to elaborate it more. It's basically the social tax and personal income tax and other taxes that will be taken from all the transactions which are not basically allowed for the company. Even if you are speaking about that companies doing business with offshore, sending money to offshore, then this can be also considered as not okay transaction, and the fringe benefit tax would apply. And also, if you, good point is that in Estonia, for the accounting, every transaction has to have a source document. So if you have some kind of transaction on the bank account, either you have an invoice or you have a contract or you have order confirmation to prove it that it's actually like business expense. If you don't have the source documents, then this can also be taxed in a sense that you haven't been in compliance with all the regulations, and that's why they will pose a tax on you as a result, as a penalty, so to speak. So what means what means home country if you're registered into 2 countries in the EU? Now, this depends. What do you mean by registration? Are you, for instance, living in one place and working in another place, or are you? Do you have home in both countries? Because basically, you shouldn't be tax resident in both countries. There's no point to pay taxes, like double taxes, to the both countries. So I think there's even the registration that you mean. There's usually some kind of specification what it is, because usually people are still like officially registered in one place, but they might go physically to another place. So once again, how high is the board members' fee taxes for company in total? So the personal income tax is 20% in Estonia. This is what is withheld from the board members' fee. So this is covered by the employee or the board member, so to speak. And what the company covers is 33%, which is the social tax. And this is coming from company's assets. So this is company's cost. Then Krista was asking about the A1 certificate. So A1 is usually related that the employee is sent to work in another country, and for that the tax office issues the A1 certificate. So it is a bit of like a different topic. So as I'm not an accountant, then I'm not very competent to go deep into that. But Christoph, if you do want to get like more consultation on that, then let's exchange the emails, and we can see like more detail into your case, because right now I even don't know if there should be any taxes, because as you said, this is related to Germany and Hungary, and it's related to employee and not actually to the board member. So it's a bit different. All right. So Christian is asking from Hans, from you. With what big insurance companies do you partner up and work with? I suppose you cooperate with a global working insurance company to cover cases worldwide.
So we have 2 products live. On our NOMAD insurance, we have partnered with a company called Tokyo Marine and Lloyd's of London. On the health insurance, we work with a multitude of providers. We have one key partner called Now Health International, but then we have several other partners already live or soon to be live in countries that have kind of, let's call it, with that deviates more from the norm, let's say, like the US and Canada and a handful of European countries. So yes, that's the answer to that question. I can maybe just jump to the next question, which is, In many EU countries, the mandatory insurance and/or state cover will also include an insurance for traveling outside your own country. Does it make sense to take your NOMAD insurance, or does it cover other things and extras? That's a very good question. I know some countries have this as an added part to the national mandatory insurance, like the Netherlands, I know have. I don't know the coverage on those, and I also think they are both, well, at least country specific. What I can say is that like normal extra travel insurance, like the one I have in Norway, for example, is something that will cover me for a period of time after going abroad, like 45, 60, or 90 days. Then it would cease to cover me. So then I would have the need to have something extra. And that's where NOMAD insurance comes in. You can buy it abroad, and there's no limitation on, you have to renew it once a year, but there's no limitations on how long you can be abroad. I think that's why we see people from those countries with those policies buying with us. Next question, you are an insurance broker, correct? No, we're actually an MGA, which is similar to a broker, but we don't we build our own products from scratch, the insurance policies, and we tailor make them for our kind of people. So a broker would typically go and look at the market and see which policies is out there, and then look at every individual case and find the best policy for that person, depending on what's out there. We basically go in and we build the product ourselves, and that's our offering. And if that doesn't work for a company, for a person or a company, then you can go to an insurance broker, kind of. So we're MGA is what we are perceived as, a managing general agent. Yes, I think that was me. Back to you.
Or written and then asked, in Poland we have fields of activity that must be subject to VAT from the first euro, for instance consulting. Are there any fields of activity in Estonia that must be subject to VAT from the first euro and force the company to be a VAT payer? Yeah, basically, if you're speaking about field of businesses and the general VAT registration, then we don't have such in Estonia, but there is a limited VAT registration. And this is when you buy something, when you buy services from other EU countries, then basically you would have to register for the VAT, limited VAT from scratch before you do any transaction, so to speak. But as for the general one, we don't have this specification. I think it's the same in Poland, so it's similar that we are speaking about the limited liability VAT, limited VAT registration. Sorry. All right, and Christian is asking also, if you have only expenses in your first year but no income from sales, thus making only a loss, do you still need to submit the declaration to tax office at the end of the year? If yes, what is the deadline for in Estonia for declaration 2020? So in Estonia, we don't submit tax declarations. We submit the annual reports, and the annual report is submitted to business registry. And yes, even if there's loss or there are no transactions, no bank account, nothing has been done, even then there has to be a annual report submitted. And the 2020 annual report will be submitted by 13th of June 2021. If the financial year ends, then the company has 6 months to submit the annual report. When we are speaking about the declarations or tax declarations, then we are speaking about the VAT and salary declarations, and these are done on a monthly basis. If the company has Estonian VAT number, or if the company has employees in Estonia paying the taxes in Estonia. All right, and Immo is asking, so if the board member is tax resident in country B, the company pays company income tax in Estonia, social security fee in Estonia, and the board member pays income tax in country B, right? Actually, so this is about the board member fee, right? If the board member is tax resident in country B, then the social security is also private person tax, so it will be also paid in country B. So I hope this kind of explained or answered your question. And Marlene is asking, if you have a double citizenship, you have registered into 2 countries officially, both as a resident, then it's a gray area, I think. Yes, that's true, because, for instance, in Estonia, you can't have a dual citizenship. Even if a child has, then when a child turns 18, they are forced to actually choose whether they consider this or that country their residency country, which is quite annoying, and not considering what is happening in the world, because families are not like Estonian mother, Estonian father anymore, but there are mixing the very, very different options there. But if you're speaking about the residency, then your personal residency where you live might not be the same as the tax residency where you pay taxes. That might also be something that you have to consider, that although you might live in Estonia, I might be tax resident in, I don't know, Sweden, because I just returned from there. And yes, it is related to the 6 months rule. So going forward, or should we then register out from the first country or choose where to pay taxes? I guess yes. Basically, that's it. That you choose where you pay taxes, and you don't pay taxes in both countries. And yes, it is the EU rule that if you stay longer than 6 months in one place, you basically should give up yourself as a tax resident in that country and renounce the tax residency of the previous country. So it is country specific, and there are the company level is different than the private person level. And usually you have to sort out, as a digital nomad, you have to sort out the private person tax residency level, and then we can work up from there and sort out the company's tax residency level, like where the company should be paying taxes. Nobody forces really. Well, in Estonia, it is mandatory that you have to choose where. If you are in a different situation, then it's good. But by Estonian legislation, it's quite stupid that people have to choose from between one and the other mother country, basically. You said board member fee in Estonia has fewer taxes, no pension or unemployment benefit, but 20 plus 33 is not less. Yes, 20 plus 33 is not less, but consider that 20 is private person tax and 33 is company's tax. So you can't put them in a one pile. So these are two different taxes for two different target groups. And if you're speaking about regular employee, then yeah, regular employee has also 20 and 33, plus we withheld the pension amount, and then there's the unemployment insurance premium, which is 0.6 and 1.8%. One is paid by the employer, one is paid by the employee. So I hope this replied your question as well. As I don't see any other questions. I hope we managed to cover all. And we are running out of time as well. So we thank you. We have the final one. In other countries, you pay corporate taxes even if the money stays in the company. That's true. In Estonia, you only pay out it when you pay out the profit. And that's a positive, a huge difference. That's right. You have understood it correctly. But keep in mind the permanent establishment, that if the permanent establishment is somewhere else, then this huge positive difference might also be a little bit less. And so last, Ima's question for dividends: the company pays company income tax and the beneficial owner pays tax in country B. Yeah, and there can be several layers again here. So yes, the company pays company income tax to Estonia. Shareholder receives it. If the shareholder is the private person, then usually they are also the beneficial owners, and then they pay their personal income tax in country B. That's right. But if there's a shareholder who is another company and there's another this is owned by another company, and then there's this final private person. So in some cases, the beneficial owner might not be the shareholder who is holding the company shares. That's also that beneficial owners and shareholders in some cases may be different persons or different forms. All right, so our time is up. Thank you everybody for joining us. We do send out the recording of this webinar as well. So if anybody has any questions, you can contact me or Hans. And thank you for your time. Have a nice afternoon. Bye.